Good afternoon, everyone, and let us begin today's session. My name is Mugdha Lele, and on behalf of the TechX team at Venture Center, I am happy to host the third wave of our Only One Theme awareness talk series on innovation management. Today is the 13th talk in this wave of Only One Theme, and today's topic discusses venture studios. Our speakers for today are Hiran Vedam and Varadarajan Krishna. Let me briefly introduce both the speakers before we begin today's talk. Our first speaker is Dr. Hiran Vedam. Hiran is the co-founder of Ashwatta, a venture studio which builds high-impact climate tech startups in India. Prior to this, Hiran was a business fellow with the Breakthrough Energy Fellows program. As part of the program, she supported the progression of early-stage industry transforming climate solutions of the innovator fellows in this program, taking them towards global markets. Specifically, she supported them with their technology de-risking, piloting and demonstration, supply chain mapping, IP strategy, and startup financing. Earlier in her career, she was Managing Director Asia for Nano Holdings LLC, investing in early stage advanced material based solutions for energy efficiency, environmental sustainability, and water. She has considerable experience in different areas of the lab to market journey in the US, Canada, UK, Singapore, as well as India. Hiran has been the chief editor of Venture Center's Prime Playbook, a practical guide to science based entrepreneurship. So, this was briefly introducing Hiran. Our second speaker for the day is Varadarajan Krishna. Varad is a global serial techpreneur, angel investor, and thought leader with over 34 years of experience in building and scaling technology ventures across embedded software, telecom, clean tech, and others, with multiple successful exits, including 2 IPOs. A strong advocate for open innovation, he co founded the 100 Open Startups, which is the world's largest structured open innovation platform. Established at UC Berkeley in 2007 by a group of deep tech entrepreneurs. You will, of course, hear more about it in his section of the talk, which Varad will be taking over in a few minutes. In parallel, Varad actively mentors entrepreneurs, having guided over 300 founders through leading incubators such as the Derby, Sign, and other incubators. And he serves as strategic advisor and partner at the UK India Cross Border Next Generation Fund 3, identifying and scaling early stage investments. As a recognized global speaker, he is frequently invited to deliver keynotes and panel talks on innovation, commercialization, venture funding, scaling, and exits, reinforcing his commitment to fostering a thriving global startup ecosystem. So, briefly concluding the introduction for Varad and handing over now the session to you, welcoming, of course, both Hiran as well as Varad for this session. Hiran, over to you.
Thank you, Mugdha. Appreciate it. Okay, let me first share. Share. We should have tested this. Sorry.
Are you able to share?
I don't see Hiran in the call. I think there was some. I think she's dropped out.
Excuse me.
Vedang, please make speaker guest the co-host. Yeah.
Okay, let's see if this works. Yeah. Okay, sorry about this. Okay, you can see the slide, right?
Yeah, we can.
Okay, all right.
Just need to go full screen probably.
No, it is. Huh? It is full screen, right? What are you seeing?
I'm not seeing it full screen at my end.
Okay, option. Yeah, it is full screen.
Yeah,
Yeah,
Now,
now it's okay.
now it's better. Yeah.
Okay, all right. Thank you, and sorry for the technical snafus. I'm Hiran, and I'm a co-founder of Ashwatta. We are about 5 to 6 months old, and we build high impact climate tech startups. Um, and we are a venture studio. So let me jump into what a venture studio is. Venture studios are institutional co-founders. So you can think of us as your co-founder as you build the startup. And in addition to being a co-founder, we also do investments and help the startup with all the services that are required. So we are an entrepreneur, an investor, an operator, and also an advisor to the startup, depending on what stage of the entrepreneurship journey this startup is at. And typically, because of this, we do due diligence at every stage of the startup building, and this leads to higher returns and also deep de-risking throughout the process of building the startup. And just to compare a venture studio against other models that are more prevalent here, like an accelerator or an incubator. Typically, a venture studio is with the startup from idea all the way up to scale up. Incubators can be there at early stages, but mainly they don't necessarily help you put together the team or act as a co-founder. Definitely none of the other parts, other players in the ecosystem come in as a co-founder, and that is one of the key distinguishing factors of a venture studio, apart from the capital and the services that we provide. And venture studio model is not actually very new. It's been around for at least 20 years, or if not more. And there have been venture studios across different domains, across different sectors, in US, in Europe, and in other parts of the world. It's a fairly new concept in India. And venture studios have successfully raised a lot of funding, uh, hundreds of millions of dollars. And you may be familiar with Flagship Pioneering, that's the venture studio out of which Moderna came, which was in the news during the COVID time a lot. Right. Some of the other startups too are very familiar. I mean, we are talking about investors like Mark Anderson, Peter Thiel, very famous people investing in these venture studios. And not only the famous, the Silicon Valley investors, even people like BCG and EY have invested in venture studios and have tried to build venture studios. The reason is that typically a venture studio can lead to shorter time frames for achieving growth and also higher returns. And this is because there are, I mean, the venture studios put in money so early in the path of the startup, and are with the startup throughout. So there is less dilution of the startup from multiple investors coming in at different valuations at different rounds. And because you are doing deep thinking before you even put in the first dollar, there is that ability to de-risk. And the startups have access to a pool of shared resources and talent that generally is hard to find if you are a first-time entrepreneur, or even if you are an entrepreneur who has done it before. So there are, in climate tech specifically, because we are a climate tech venture studio, there are many established venture studios. Many of these are in Europe, like Marble is from France, Big Circle is from the Netherlands, Carbon 13, Deep Science Ventures from UK, Mark 49 from the US. But these are much younger compared to after 2015 or so. Many of these have started, and unlike like a VC, the model for a venture studio is can vary widely. It can depend on which sectors they're investing in, the market segments, the technologies, the trends, business models. Every one of these parameters is tunable to the particular venture studio. And which is why when you say you're a venture studio, there is no like one model that people can relate to. And this makes it interesting space, but at the same time, very challenging space to raise funding. And which is why raising funding in this space is a challenge and continues to be a challenge. Although we have just seen that there are successful models out there. And it's also very hard to explain, like when somebody comes and says, oh, you're a venture studio. And I mean, over the last several months, I mean, this is one of the things I've had to do. Whenever I say, oh, we are a venture studio, either people think you're an incubator, or they think you're an accelerator, or you're a venture capital. We are none of those. And that's why, because the mental models around venture studios are difficult for people to understand because of the wide variety of activities we do, depending on the sector, depending on what is the need and the niche that we are filling in the ecosystem. So I will describe what we do as Ashwatta. Many of you have seen this from Venture Center, from many other places. And if you look at the basic research to market ecosystem, especially in the climate tech space, there is a lot of funding, lots of small pockets of funding available in the early stages. And as you get to later stages, it becomes more and more difficult to raise the funding. And the funding availability is low, and you have to go to multiple places. You have to go to multiple venture incubators or like different programs, apply them, manage them, and that is a significant burden for a young startup. It's also like as you grow and go to slightly later stages, larger funding is either available only as equity or debt. And if you take the Indian climate tech ecosystem, we are the third largest emitter, and there is a large potential for both climate mitigation and climate adaptation in India. But if you look at where the funding has been going for climate tech in India, majority of it has been in deployment of solar, wind, combination of those with batteries, or in electric vehicles and again batteries. So majority of it, I mean, close to 90% of the funding is going there. And rest of the sectors, whether it's food agri or waste to what a value, or like industrial decarbonization, very little funding is going there today. And as the ecosystem is growing, the challenge has been shortage of both talent to help grow these companies, and also, I mean, we already talked about the fragmented ecosystem and infrastructure that is also fragmented and inadequate for building this startups in this space. And more importantly, if you want to build like a really deep science based climate tech company, there is very little patient capital available. And these are some of the gaps we saw, and these are some of the gaps we want to address as part of as Ashwatta. And yes, why can't we be a venture capital? Why are we a venture studio? Because venture capital typically works on a power law distribution. What we mean by that is that venture capital invests in a lot of companies, but their success is dependent on few outsized successes that really give you that returns for the entire portfolio. So even if like 7 out of the 10 or the venture capital invested fail, it is still acceptable to them, because if they have one success that gives them 30, 48 return, they have enough returns for the entire portfolio to justify that. But in climate tech, I think it is an unsustainable model, because we need to ensure as many of these high impact technologies get to the market. And we need to build them to success and give them the resources and the support that is needed to succeed. So this is why we did not want to go for a venture capital model, and we decided to build a VentureStudio instead. And so this is a little bit about us. So my background you've just heard. Suresh is also an IIT Madras alum, and he comes with several decades of experience in ports and shipping and power infrastructure. And he's been an angel investor over the last few years, and he's managed large debt and equity funds, raised and also managed them. So who are we? We are basically an impact-first climate tech venture studio, and our objective is to provide that catalytic funding support needed to take transformative research to winning startups. So we focus on 5 areas. I mean, as climate tech, it can be anything. And we have narrowed it down to 5 areas around sustainable materials, critical minerals, sustainable food, including additives, and also agriculture and so on, methane reduction and so on, industrial decarb and heavy transport. And again, that is quite a broad area. And the way we are being selective is looking at the metrics around greenhouse gas emission reduction, energy efficiency, material efficiency, adaptation, and just transition. And of course, underlying all of this is our ability to measure and model the impact that we can create. So this is just a brief overview of what we are doing and what we look for when we select these technologies. And our network, we are just starting to build a network of partners around the country and also around the world. And what we bring is this experience and knowledge around deep technology de-risking, funding and grant support, operational support, and partnerships. And we are trying to accelerate this growth by being a catalyst to support the startups throughout their journey up to at least Series A. We are not the only climate tech venture studio in India. There are 4 more, and all of us started in the last less than last 2 years. So it's exciting times for climate venture studios here. And with that, I pass it to Varad. Over to you, Varad.
Yeah, thank you very much. You have set the context very well. So I'm going to make the presentation much shorter so that we have more time for our discussions. So we're going to go deep dive into maybe 5-6 slides into another venture studio that I run. This is for a horizontal, which is AI. So for all the listeners and those who are on these particular session, I would like to say the major difference between incubators, accelerators, and venture studio, having run all of this, is that venture studio becomes a co-founder, pretty much like a co-founder, along with the main founders, right? And we partake all the challenges and opportunities and work alongside, shoulder to shoulder, with the founders. So that's I would put it like a practical description, though all the theoretical descriptions exist. Now, let me go on to explain to you what we do at AI Venture Studio. So we have taken an approach which is similar to what Venture Center does. One of the first startups that we did, this is not taking any outsiders, but our own internal challenges and ideas from our own internal teams, and then we converted them into startups and got them good traction. So next slide. So what you're seeing here is that we found that these are the challenges, right? Pretty much what you heard from also with, I'm not going into this details, but I'm just saying that these are some of these challenges that generally you face in incubators and accelerators, right? And that is a problem that we are trying to solve through a venture studio. And so there are questions coming up. I think those we can answer at the end. So
Yeah, we
what?
can take it up at the end. I just thought
Yeah,
I'll keep putting those questions.
yeah,
Others are
thank
also welcome to put their questions.
yeah, thank you. So as you can see, these are the four major, I would call challenges, and also, what we define as the problem statement. And this is what we worked with the founders, the founding teams to solve. Next slide. So here, what we've done is we have taken AI as a horizontal and applied across to begin with in life sciences. That is, you're going to see in genetics specifically. And this has been my co-founder's lifetime research. He has been I would call it like a researcher in the bioinformatics area. He spent quite a lot of time in basic research at IAC, then went on to pursue his PhD at the Tampere in Finland, where he spent another 12 years. So that is the first startup we brought out of the venture studio, and we got tremendous traction now, and we are now raising $4 million for this particular startup. So next slide. So what you're seeing here is, some of the benefits, right, being in the venture studio. And I'm now going to get to this, these are some of the various advantages you get, like, very quickly de-risking, and then faster time to market, the technological advantage of making the edge on that, access to a global network that we have, through my other networks. Next one. Next slide. And what you're seeing here is also helping. So these are different models I've seen also in the world, is that many times IPs are latent or lying in the labs of various institutions, and those are taken up, and funding is giving about, say, 2 years runway, and the CEO who has a similar knowledge and background is selected, and the team, also an execution team, then works with this and then brings it to the market, and then later gets acquired or it goes to market. So there are many models like this I've seen in other institutions in the world. Next. So what you're seeing here, the first one is what I began to describe. So let me go a little deep dive, because this is actual startup which is in the market already, Genix.ai. So what we have done is, like I said, the diagnostics of the yesteryears, like, doing the phlebotomy, the blood-based or biopsy-based, is getting slowly redundant, and insurance companies and more and more service providers want very accurate diagnostics, and that is where AI-based genetics comes into play. And genetics tests are done where we take a biopsy, extract the RNA, DNA, and then create a model, and then a 500-page report is generated, which is then used by the doctors and caregivers to look at a kind of a pattern to what kind of medicines could be prescribed, what kind of a pathway they can take for patient treatment, and so on. So this is becoming now a norm all over the world, and especially I'm talking about North America. We see, especially in the US and Canada, there's a new term catching up called precision medicine. And so the heart of the precision medicine is genetics-based diagnostics, and that's what we are in. And then the next one we can see is about clear cloud, which is nothing but to show you how a technology like AI, which is horizontal, can be applied to different problem statements, and this is to do with noise cancellation. So this is like, if when we are in a crowded environment, there is too much noise, and the person that is listening, a person that is talking, you can't hear. So by this technology, it takes a few seconds to adjust, and thereafter, only the talker and the listener can be heard on the headsets that they're wearing. And so this is a AI-based technology that we have developed, and it's being used. I think it's in about 20,000 installations now. It's there. And the third one that you're seeing is also to do with similar, learning ability. So this is, you can say, like LMS. So the LMS where the systems. Suppose it's a university or a school, and there's a curriculum. The curriculum progressively gets tougher based on the learning ability of the learner, and it is individualized. And the fourth one is to do with another version of the learning management system, that the system itself adapts over time and becomes more and more, as I said, you know, as required by the individuals, and also by the institution, so that the testing and the scores that are allotted later, there is some kind of a weightage, and then we are able to come up with more, let's say, it's like I would call like you know, systemized education system. Next. So this is the founding team, and as you heard already about me, I'm not going into it. My co-founder is also a PhD, and he has done, like I said, primarily in bioinformatics, and then spent about 12 years in AI. So, and now we are helping other companies to go into the market, and also to make their product offerings, let's say, much better than what they were when they came into the VentureStudio. So we do primarily, four types of audit. Technology audit, to find out whether the technology approach that the startup has taken is the right one, or is there something better we can offer. So we do the technology audit and then improvise that. Then we also do, of course, the financial audit to see where they are lacking, and how these finances are being currently used. Is there a way to reduce the burn, and so on. And then, of course, comes other types of audits that we do, and improvising and bringing a growth for startups that join our venture studio. And so it's like we do a bunch of audits to see the gaps, and then we work towards addressing those gaps. And then finally, they'll be able to get funding from our own venture studio, and we also open it to our networks of venture capitalists, and also to the corporate that you heard in the 100 open startups. We have 11,500 corporations in that, and depending on the sector, we can actually approach that particular corporation. Next. So this is the kind of market opportunity that we wanted to show you for different sectors that we are in. That is to just to this is to just to show that though it is one particular horizontal, but we are showing it in different verticals, how it's applied, what is the growth path, and so on. Next. And this is the revenue growth, and we have also listed the other numbers, and some of it, we are already on the way. Whatever numbers you're seeing, maybe it is not relevant for you at this moment, but just to show you how well developed it is, that we are already, on the profit making in two of the startups, and many installations have already happened in the other two startups. Like, it's already in the market, and all the four, of course, are in the global markets, and we are generating revenues. Two are yet to achieve the break even. Two already are profitable. Next. And so this is basically what we are saying. That is the that there is a huge demand that we are seeing in the venture studios model. Like it's not only, I will say, we running it alone, but there are corporations wanting to run this. We see that more and more corporations are moving out from the accelerator approach and going to a venture studio approach, and thereby they are encouraging their own executives and employees to come out with innovation and their startups. And so this is a model that we see. Then there's a huge demand for it. And then we are seeing, of course, AI. Today there is so much talk, and that's why we picked it up. And we thought with this knowledge, the knowledge that we have in AI, the watching of the trends, like spending quite a lot of time in the developments and so on, we are actually, in the right area at the right time. Successful startup exits, and so we are hoping next 5 years we will be able to exit two of our startups out of the four. And in the meantime, we'll be also taking in more startups, and then be helping them with the AI as the horizontal. So it can be any particular vertical you could be, but we can use our knowledge to apply. So this is going to be the part of our discussion. So now with this, I will stop. Uh, over to you now. We can start the discussions, Hiran.
All right. Thank
Let,
you, Varad. Yeah,
can I start with some questions? Because first, let's
sure.
just understand nuts and bolts of the venture studio model. From what I understand, you're basically saying that the venture studio model essentially brings sort of like experienced or well networked or experienced co-founders who will bring their own money, right, into the plan, right? It looks like that. So,
Let
uh,
me correct you. Let me correct you.
yeah,
Not necessarily. Okay, so it so happened I've been through some exits, but it's not always like that. It's not that you need to start with tons of money in the bank. It's not like that. I even gave you a model, right? I've seen this in North American markets,
mm,
where the idea is just lying on the table. It's like over the years, many ideas or IPs are lying there, patents are lying there, but it was never monetized. But they are picked up, and the funding is given by a third agency. It's not by the owner of the IP. It's not by the institution that is running it as a venture studio, but comes from a third party, right? And they give a runway for like 2 years. And in fact, together, all the three together, then hire the CEO, the CTO, etc. And with their knowledge and expertise, they already, have talked to some potential acquirers, before they start this. So I'm just saying, already these kind of models are existing, and we are not doing anything new. Only thing we are doing is that we can see that one is vertical based, that you heard from Hiran, is climate change. It is climate related, is vertical. Whereas what we are doing is AI venture studio, which is a horizontal, and that's the discussion we are going to have.
yeah,
How a vertical versus horizontal, how it's going to work, and how it's going to complement each other. So that's the
yeah.
discussion
But
today.
I just wanted to get this clear. So, investors are going to put money in the startup or in the venture studio. Is investing happening from the venture studio's balance sheet, or is it happening directly into startups? Because the model of it happening in the startup is already quite known, right? Most of the venture capital firms, angel investors would do that.
Yeah.
So
So the
what
answer,
is the typical model? Because I think flagship pioneering, for example, would put in its own money, but they also go one step further, which is that they say that we don't need the academic technologies, we'll develop it ourselves, right? So that's a further, taking it even further ahead,
so
right?
I will answer it this way, right? There are investors, there are VCs, right, or family offices who invest in the venture studio per se, of their liking, right? They may have, say, for example, there is a family office only in biotech. So they may find it interesting to invest I know of a New York-based family office with some $3 billion in their kitty. So what they do is they invest only in such venture studios. Initially, they used to invest in the cap table of the startups. So I'm just answering your question is that the trends both are there. Like investing in the venture studio means you can get a reach to many startups, whereas if you're investing in one particular startup, you get the reach of only one startup, right? So I'm seeing that. And just giving the example without naming the particular family
Yeah.
office, they are now switched to, they have already invested in about 400 startups individually, but now they've taken a stance they will invest only in venture studios of interest to them.
Okay. So that's
I
actually
think
related to a
Premna,
question which was there, which was relating to whether, VS needs to get any SEBI registered entity done or something like that. So that's why I was asking you that as well.
so
Yeah, go
venture
ahead, Hiran, please.
studios, yeah. So a couple of things, right? You said, okay, so do we just bring in some gray hairs and some networks and maybe some money? No, what we bring in is the discipline more than anything else. Because if you're doing it as an individual founder, you can get tired of it, or like you can go yeah, I mean, that discipline as an individual is not there, but as an institution we put that discipline in place. So that is one thing, because most of us have a playbook that is kind of our secret sauce that improves the efficiency and so on, and that's what we bring to the table. And to answer your question around like, do they invest in? Do we need an AIF registration? It again, like most things with venture studios, it depends is the right answer, because venture studios can do it as set up a fund and get the investors into the fund and invest through that, or venture studios can also bring in money directly into their balance sheet and invest directly from the balance sheet. So, I mean, they may start off doing directly as a balance sheet from balance sheet, and then may set up a fund later. So it really depends on what stage of the evolution the venture studio is at and which ecosystem it is at
Hmm.
inside.
Okay. So the other question which I had was, usually, investors are very clear that they just want a single-minded focus of entrepreneurs on one startup. They don't like people who are have wearing multiple hats and so on and so forth. So one of your tasks is it to identify such dedicated founders for each of your startups? I mean, is that what a venture studio does? Or does venture studio offer sort of second some of their team members into these startups? And if they do that, how do they keep that single-minded focus that the investors want?
So Hiran, you want to take that or should I go ahead?
No, you start off. I'll add.
Yeah. So the answer for this question is, um, they expect us a lot of curation to be done by us, right? And um, just without again naming, a big family office in India has been telling me for now close to 6 months they would like to invest in our venture studio, and that is pretty advanced stage. And why they want to do? They've already invested in more than 130 startups themselves, right? They have a fund, cat to fund, etc. And they still want to invest in their venture studio because the success rate of let's say a venture studio is very high. And between us, I want to also share one more secret. See, venture studio as opposed to a venture capital, as you heard already from Hiran, is that they invest in probably 100 startups and expect only, say, less than 10% to succeed. 90% is going to fail. It's already an assumed number. And so what they do is they invest in large number and then hope that out of the 10% will succeed. And then they come up, top up with more investments in those, right? Whereas in venture studio, it's not like that. We don't take more than 6 to maybe max 8 startups a year. And that is the focus, right? And that is what the VCs want. That there is someone doing it. If you go to an incubator or an accelerator, right, there are many they take up and then try to accelerate them. But in this case, what happens is we bring not only this knowledge network, all that you heard, but over and above that, the single-minded focus to help the startup. We ourselves become, like I said, the co-founders, and we already have a lot of knowledge what the startup is doing, what they are doing right, what they are doing wrong, and how, like I said, the word curation, a lot of curation would have happened by the time the VC comes in. And remember, they would have achieved already massive traction. And that's what they're looking for, market validation. If you see a typical VC, right, what they're looking for? They're looking for market validation, number one. Number two, they're also looking for in what ways they can actually help, the founders in, say, overcoming some of these challenges, right? So it could be a challenges relating to technology, could be relating to market, relating to competition, etc., right? And so what is happening is we are addressing all of that. And so when the venture capital comes in, we already, addressed most of their concerns, making it easy for them. Now over to you, Hiran, about what you would like to add.
Yeah. So to add to that, see, venture studios have different models, right? Some like they take up very early stage startups, so there is at least one founder or co-founder that would be fully dedicated to it. Or if we start like our model where we are looking at like taking transformative technologies and building startups, the EIRs may start off as a part of the venture studio team. They work on the startup, they build it, but eventually they become part of the startup and move out. And I mean, these are projects that are going through different stages of curation, and at different stages, you might decide you don't want to follow, like, go through with it. Then these become experienced pool of people that we can deploy to other projects, and we move them. So we are moving the experience level of these people who are going into startups, and at the same time we are curating them and ensuring all the key risks are removed as these startups go on their own.
There's some questions which relate to both from Bipin Deshpande and Rohit Srivastava, which relate to how does the cap table look like when venture studios are involved, and what is the equity holding that they usually hold? How does it shape up in the future? And is there a full-time independent co-founder? How does that person's equity change?
So we've, again, there are different models. I have seen, people take 10%, in the equity, right? And then there is also for the mentors, there's the equity split that is given. So there's I would call it like to join the venture studio itself, there's a equity to be shared. And over and above that, there's for all the mentors and the coaches, it can call it like a business coach who is going to be the head coach. And then we have also the, SMEs that will come in. So all of them will get some tiny percentages. And, then everyone is like working together, right from the very beginning. And then also to run the program, right? Either you can pay a certain amount of money for it, or again, you can pay it in equity. So we see, as I said, different models that exist. And we in our AI Venture Studio, what we set out to do is that first we'll build our own startups and make a success out of it. And then it becomes a value proposition for others to join. And that's why we chose these four sectors, as I mentioned, where we already had traction, and then bring them to market and make them successful. Then it's a model that others can, get inspired by and join us, and then we can help them too, right? So that's
So,
what we have done.
just
And
to clarify, your each of your structured as a company, right? As a venture studio, as a private limited company, I presume, right?
Yeah.
that's
And
correct. Correct.
would the startups be subsidiaries, or would they sort of be spin outs in a
No, no,
manner of
no. They are,
speaking?
no, standalone.
No?
No, no. Let me clarify that, right? I told you
Yeah.
already, they're all standalone. I mean, though four startups each is a private limited company, though they are all our own, We own board positions there ourselves, which is our own, right? So I'm saying that even if it's an external startup, it'll work very similar. Suppose there's an XYZ startup joining us, the venture studio invests money in that, then we take an equity position, right? That's on the cap table of the startup. The startup is a private limited company like any other. And our own, the venture studio has its own structure. So I'm saying to you that the question that you had is how will it show up on the cap table? Yes, it will show us like ABC venture studio, etc. Right? And I
Mm.
can actually ask Hiran to also add. Please, over to you, Hiran.
Yeah, I think to an extent, how much equity a venture studio takes depends on the time horizon to exit. And the key thing I've seen is to ensure that the full time sufficient equity to make it their while, worth their while to continue building that and make it a success. Especially in areas like climate tech, in biotech, where there is a very long gestation period. The equity held by the founders is much larger compared to what the venture studio holds. Because they have to go through multiple rounds of funding and they still need to retain sufficient equity when they exit to make it worth the while for the startup, for the founders who are full
Yeah.
time. Yeah.
Yeah. So there are also questions regarding how do you choose which technologies to go with, which sector to specifically, or which particular problem to solve, or which IP to bet on. What are the typical criteria that you use, and how do you go about it?
Okay.
Um,
Okay. Go
yeah,
ahead.
Hiran, go ahead.
All
Yeah.
right. So we are a very thesis-driven venture studio. Again, this varies depending on which venture studio you go with. So, which means for us, I mean, we focus on the 5 areas, right? We have deep dived into those areas and said these are the problem statements we broadly want to solve, and then we are actively looking for solutions that kind of solve those problems and then we will be putting those together to build the startup. So it's I mean we uh, so far we are not thinking about investing in a startup that comes and says, okay, here is what we are, here is my startup, invest in it. But because that's not how we are set up, we are focused on like looking at, here is my problem, here are the solutions, and trying to find like how do I build a startup based on that. But that's not necessarily true for every venture studio, and Varad, you have a different model, so go ahead.
Mhm.
Yeah, thank you. So let me answer this quickly also. See, if you want to join, I don't know how many of you in this audience are startups and looking to start to join an accelerator or an incubator. So, what you do normally, you do some homework about what this accelerator is all about, right? What they do, what is their success, what are the kind of network they have. You do all that, right, before you join. The venture studio is something similar, and only thing is that you have to do a much more deep research about the success of venture studio and what is it they are focusing on, whether the kind of problem that you're solving or the challenge you're solving is something which is aligned. So suppose you look at this climate change, you saw that pretty much the entire value chain in climate change is already addressed by Hiran. So if there is something which is outside this value chain, I'm not an expert at this, but maybe Hiran can say. But I'm saying that if the startup has got some value proposition which is outside that scope, then you probably have to look at another venture studio. So I'm just saying that you have to do some deep homework and finalize the one that is going to fit your needs. And that is pretty much, I would say, an exercise any startup would like to do if they're joining an incubator, accelerator, or for that matter, even venture studio. You have to do the similar kind of homework, but in the venture studio, it's a much more deeper research you have to do.
So the problems that you are trying to address, and in the case of, for example, Hiran, where it's more aligned around a vertical, is something which you would have sold to your investors, isn't it? In the sense that is the theme that your investors will buy into, and therefore you're focusing on providing solutions in that space, right? Am I right?
Right.
Okay. The other question is, your investors, are their expectations of returns larger than that from a venture capital firm or smaller than that of a venture capital firm?
Um, I would say it is very similar, but the success rate is much higher. Suppose they invest in, say, for example, 6 or 7 startups in the climate change, which Hiran runs, and the chance of all the 7 startups becoming successful is high, and that is what the venture capitalists want to bet on. Is supposed to look at an accelerator, right? Maybe 1 in 10, maybe none of them will succeed. That is the difference, when you compare with an accelerator and the venture studio, how a VC approaches it, how the VC thinks, when he's investing in a startup that has come out of an accelerator versus a venture studio. I think that will help you to understand.
And one more thing that the investors really get out of this is also because they are, I mean, we focus on specific areas, and when we are doing this business-based thing, they get to see ourselves. I mean, the startups we invest or the deals we invest in, and the technologies we decided not to invest in as well. So that is a great learning for them, and that. Knowledge and that expertise that we provide is another value that the investors look for when working with us.
Yeah.
Yeah.
No, I can clearly see that. Let's say that for example, you might have your networks and understanding of the clean tech space which you bring to the table, and you'll be, hopefully a company will get a fast start in that space and be able to do that, or also even conceptualize certain solutions and so on. In the other case, in Bharat's case, there's an AI theme, and there's a lot of background work that's gone behind it, a lot of IP maybe. So there's a lot of technical probably inputs also going in as well. Do you bring your own IP into the table? In Bharat's case, since you're very horizontal focused, is there any tangible or intangible IP that comes into the game because it's a venture studio that's focused on one horizontal?
Yeah, exactly. So I will talk only from the point of the horizontal, that is AI. So we bring IPs in AI, right? And that's what is the value we bring in. So if you look at the vertical, like climate change, there will be IPs which Hiran and her team may bring. So that's how I would like to summarize. So depending on which of these sectors that you are in. So I just named climate change as an example, but it could be any other sector. It could be deep tech, for example. It could be space tech and so on. And depending on the knowledge or the expertise the founders of the venture studio bring in, the let's say that is a contribution that will happen to the people that are getting, let's say, benefited from this venture studio approach. So let's say like there are 5 or 6 startups, right, that are in the space tech venture studio. The knowledge and IP that the founders of the venture studio bring in will then be able to enhance the offering of the individualized startups. I wouldn't say for all of them, but some of them at least.
Okay.
And that's
So,
exactly that's how I would say even our AI. In the case of AI, what happens is it's a different approach, and that was something which me and Hiran wanted to discuss it and be a part of the moderation that we wanted to do ourselves. Was to say that key difference is that.
sorry if I disrupted that.
No,
We
no, no,
got
no
a
problem.
lot of questions anyway.
Yeah, no problem. This also is something which you kind of disrupted our thought process, but it's okay. We have, pretty much addressed everything. So I'll just answer that. In the case of horizontal, what happens is a lot of IP that can be adapted by any sector. It could be climate change, it could be deep tech, space tech, as I said, and because AI is like, if you see the vertical doesn't matter, right? Any vertical you can apply it, and that's the advantage, right? So that is something which you're seeing in our own 4 startups, right? The IP that we have brought has been applied to all the 4 startups that we created.
Okay. What does the data look like? People have asked about, is it only a US thing or India as well? what does the data look like for venture studios in the US? I know it's a little early in India, but how have they been doing in terms of performance and what they're able to deliver?
So, Hiran, you want to answer this or should I?
Well, I mean, so climate tech venture studios in the US, in Europe are also very young. So we don't have um, large success stories yet. But I mean, you look at things like Flagship Pioneering, which is kind of similar characteristics market, and they've raised hundreds of millions of dollars successfully, and they've had like really great exits, and they've built multiple venture capital funds to continue to support the startups. So definitely a successful model. It takes a while to kind of get to ignition, but it will get there in India.
So, here in the final question, if you were to put it in a sequence of steps, how does it get started? What is the typical step, which is, say, you guys going and scouting for potential solutions for problems that you have identified? How does it get started? How do you, when, at what point you engage with others? If you haven't found an independent founder for that, you just get started on your own. How does that work? Just run me through the typical step-by-step process.
Just before
For
Hiran, you answer that question, let me alert everyone in the audience. We have put in the feedback link, so please do not leave the session without giving your feedback. It helps us to curate our sessions. Yeah, go ahead, Hiran.
Okay, we are really running short of time, so I'll keep it very short. Um, but so our model is to continuously scout for technologies in these particular problems we are looking for. And it's not just problems, we are looking at experts, we are looking at infrastructure, we are looking at entrepreneurs who want to build startups. So we are continuously um, connecting with the different players we need to build a successful startup. And as and it's like moving different pieces together into the startup as things move along. So there is no like the process is a lot of parallel processes that are happening that converge at
Yeah.
some point.
Yeah, so probably you look for a nucleus of one important thing, maybe a technology, maybe a person, maybe whatever, and then build around it, right?
Yes, yes.
Yeah,
So
and then
then we
probably
kind
a
of
rest of
bring
the
that.
things assemble over a period of time.
Right.
Just one, and in all this, um, the exit which you are looking at, or the people who are potential acquirers, do they play a role in the early stages in terms of defining what you pick?
Yep, absolutely. So,
For
yeah.
him, it does. For him, it does.
Yeah.
So, and definitely, yes, we already do a homework, right? When we select a particular startup, we already know how to exit them in 3 to 5 years, right? And so that's what, it's all about, working backwards. So we necessarily take a startup uh, only knowing that in 5 years max we can exit it, and then work backwards in doing whatever is necessary. And so that's exactly, I would summarize as, everything is of course exit based, and there's no point in going on building something. At some point you have to exit, and then you have to create value for all the stakeholders.
Yeah, for
Sure.
us, it is slightly different because we are looking at longer time horizons. We don't necessarily identify a potential candidate for exit when we start. But I mean, we look at the grand challenges that we have, and we know that will have the impact. And any of these are problems that many players are grappling with today. So the right solution definitely has the right players. We do keep engaged with different players. Like we have in our network, we have venture capitalists, we have corporate partners. All of them we engage with, but at different levels. And as we move these along, yes, I mean the right partner will come closer, but that is way off for us. We are not. That is not our decision point right now. Our problem, we are more focused on: is that the right solution? Does it have that outsized impact on the particular problem we are trying to solve?
Okay, great. So I think I have hopefully covered most of the questions, and nobody put up their hands. So I think we will close here. But thank you very much, and
Thank you,
thank you for taking the
Premnath.
time out to share this model. I think it's interesting and very important and very timely as well. So I'll let Mugdha do the final administrative announcements.
Yeah.
Thank you, Varad.
Thank you.
Thank you both
Thank
Hiran
you.
and Varad. It was a very interesting discussion, and thanks for joining this session. Let me alert
Oh,
the
there
start.
was a
Yeah, there's someone. Dolly seems to have raised a hand. Okay.
Yeah, I yeah, I think
Vedam, can you unmute her?
yeah. Go ahead,
Thank you.
Dolly.
It was a very interesting session. I have been contemplating setting up a venture studio, and I know Bharat. So I'd like to know a little more about both the venture studios, and especially I would like to see how I could kind of join in. My major forte is in terms of emerging technology adoption in different sectors, and sustainability is one of my main area of expertise. I have won a couple of international awards for my work in the sustainability space and also in the AI space. So,
So,
merging the
Dolly, I
two is
think I will request Mugdha to help you with connects on email. Okay? I don't want to
right.
keep everybody waiting. So, if you don't mind,
Right.
we'll close this session today. Yeah?
I
Yeah.
just wanted to know whether there is a there is both these are working in tandem also, having sustainability accelerate or sustainability related venture studio and AI studio, because both are almost like synonymous today if I really look at it.
No,
Yeah.
actually, Hiran helped us pick both these models because they are very complementary. I agree, but in a very different way. One is a vertical, another is a horizontal. So it gives you a good flavor of what venture studios do. So
Yeah,
thank you to both of
thank
you
you.
for sharing that. It was a good model. Of course, there are synergies, but there are also separate things. Uh, there are many things which AI cannot do, Hiran. So we focus on those as well.
Yeah. So let's close today's session. We have already moved past the planned time. So thank you, Varad. Thank you, Hiran, for taking this session. And if there are any more questions, we will reach out to you over email. Let me alert the audience. The feedback link is there in the chat box. Please do give your feedback. And our next talk in this series is on 25th of March, which is again a Tuesday, and that is at 4 o'clock. And the talk titled is Best Practices in Impact Assessment and Reporting for Startups. Our speaker is going to be Dr. Prasad Modak. So please do join us for the talk. If you have already registered, you would get the joining link as a default setting. So please be there for this talk, and please please feel free to share details about this talk series amongst your networks. Thank you once again.